All right, today we're on a hunt. We're looking for the next big thing in the Indian market. And no, we're not talking about the established titans you already know. We're digging deeper, looking for the small and medium-sized powerhouses that are just about ready to explode. It's the big question on every investor's mind, right? In an economy that's growing as fast as India's, the giants of tomorrow are very often today's nimble, quick-moving companies. So the real question is, where do we even start looking for them? Well, we're going to dig into a really fascinating new report that might just have the answer. It's done the hard work for us, identifying 10 small companies with absolutely incredible potential, and it's grouped them into three very distinct profiles. Let's dive in and see what they are.
Okay, first up, we've got the sprinters. These are the companies whose growth is frankly breathtaking. We're calling them the high-growth leaders, and they're all about just pure, unadulterated speed when it comes to expanding their revenue and profits.
I mean, just look at this number. Get this. That is the year-on-year profit growth for the number one company on the list, Nice's Finance. 663%. That's just a staggering figure that perfectly captures the kind of insane momentum we're talking about with this group. So here are the top three in this category. You've got Nisys Finance, TAC Infosec in the cybersecurity space, and RMC Switchgears making electrical equipment. And what's so wild is that they're in totally different sectors, yet they all share this common DNA of hypergrowth. I mean, their revenue and profit gains are well into the triple digits. Incredible. But speed isn't the whole story. Our second group is all about strength and long-term stability. These are the companies with quality fundamentals, the ones who are building their growth on a foundation of solid rock. They're built to last. So, one of the key signals for this group is a strong credit rating. You can think of it like a financial health checkup, It's a clean bill of health. So when a company like Bundata Engineering gets an upgrade, that's a powerful signal from outside experts saying, hey, their finances are solid and the risk here is low. It's basically a huge vote of confidence in their ability to stick around for the long haul. And this slide, wow, it just lays it all out perfectly. On the one hand, you have the usual growth playbook, pile on a bunch of debt to expand, which, let's be honest, can cause serious cash flow headaches. But then you've got a company like Positron Energy. They're hitting 150% revenue growth while being almost debt-free and getting paid faster by their customers. Now that is what you call sustainable power. All right, our third and final group takes a whole different angle. These are the diversified sector plays. These companies really show off the huge range of opportunities you can find across the entire Indian economy. And they're living proof that you don't have to be some flashy tech startup to hit it big. I mean, just look at the variety here. It's what's so striking. We've got high-potential companies in specialty chemicals, in power, in green engineering, and even a cinema chain bouncing back after the pandemic. It just goes to show you that these amazing growth stories are happening all over the place in every corner of the market. And if you want to understand just how powerful this group is, check out this number. This is the return on equity for ChemCart India. Okay, so what does that even mean? To put it simply, for every single dollar shareholders put into the company, it's generating almost 59 cents in profit. That is just an insane level of efficiency and profitability. So, okay, we've looked at three different kinds of winners, right? We've got the sprinters, the marathoners, and the all-rounders. But what's the secret sauce? What's the common thread that connects all these amazing, high-performing companies? But, hey, before we get to that secret sauce, the report actually lays out a pretty clear investment strategy based on these groups. It suggests a balanced approach. Put 40% into those high-growth leaders for the biggest potential upside, but then balance that with 35% in solid quality companies and 25% spread across diverse sectors to manage the risk. It's a pretty smart way to think about it. So, when you really boil it all down, it comes back to four key things. These are the four success factors that pop up again and again. First, truly off-the-charts growth numbers. Second, serious profitability. Think high return on equity. Third, a business model that can actually grow and scale. And finally, that strategic advantage of being in a diverse sector. And just so we're clear on what exceptional growth really looks like, across these top 10 companies, the average revenue growth was over 111%. And even crazier, the average profit growth was almost 144%. I mean, come on, these aren't just good numbers. This is a completely different stratosphere. So the really big takeaway here is that this list is more than just a list. It's a blueprint. It's about finding tomorrow's market leaders by looking for companies that don't just grow fast, but grows smart. They're balancing that explosive potential with really strong, sustainable fundamentals and a great strategic position.
And all this leaves us with one last really fascinating question to chew on. When you look at these names, in finance, in cybersecurity, in engineering, and more, which of these small giants do you think has what it takes to become a household name by 2030? Definitely something to think about.